Kevin?
Thanks, Jorge. Looks like the bar is getting set up. I'm not going to sit in the chair because I don't like sitting down if I don't have to. It's good to be back here. How many companies? I recognize Surfy Labs and Rise. Who else is part of a startup here? What's the company?
Spark Biomedical.
Okay. Okay. Okay.
We do mobile preventive health.
Fantastic. All right. Good stuff. So as Jorge mentioned, I used to be the VP of Defense here at Capital Factory. Last time I actually stood here on these boards was, I want to say it was about March 15th of 2020 when we launched our very first ever SBIR accelerator, which we had to do hybrid when before that was even a thing. Like nobody even knew. We said we're going to do a hybrid event. They're like, what the heck's that? But before that, the first time I was on the stage was in late 2018 when I launched the Texas Defense Innovation Forum, which was actually the entity that created the first Defense Academy, which we had just before I joined Capital Factory, right around the corner over there. So I've been doing this for a long time. I'm going to give you guys a little overview of kind of what I think is a successful business model and some things to think about as you're making the decision to enter your foray into the national security space as a technology provider, and give you just a couple of tips and tricks on some things that I see where I see companies kind of going in a what I would say probably not the most ideal path, and some ways that you can leverage some of this stuff. I mean, some of the best stuff I heard here all day was when Paul Norwood was sitting right here and he was talking about, there are right ways and right reasons to come into the DoD, and thinking that you are going to like grow your business's, recurring revenue from, $1 to $1 billion, anytime in the near term is not the right reason. But there are lots and lots of really good reasons, and I'll tell you about some of them here. So can you go to the next one? There you go. So to start with, why are we here, right? Beginning in about 2015, it became apparent that technology was going to change warfare. Facebook played a huge role in ISIS taking over Mosul in 2014, and then around that same time we saw Russia leveraging social media and other basic early COTS technologies when they took the Crimean Peninsula. And as we as a country shifted away from repeated deployments over to Iraq and Afghanistan into thinking more about how are we going to handle peer threats that seem to be surging, they decided that they needed new technology. So go to the next one. You can go to the next one. We've covered all that stuff. I think that some folks today have covered, people are talking about this problem that we need to be able to move faster, we need to be able to access newer technologies, but we haven't really got the whole business model down yet. There are lots of pitfalls in this process. Senior leadership across the DoD is recognizing that we need contracting and acquisition to be done differently, that we need to connect the Defense Innovation System with the Defense Acquisition System, and we're starting to see some traction in that. The Transition Pilot Program that was just awarded, I want to say 2 weeks ago, $100 million went out to 10 companies using procurement funding. I mean, that's a really good signal of a good start, but we have a long way to go. Let's go to the next one. Why are we interested in startups? I mean, Capital Factory is a startup accelerator. Most of the companies that are in here have given up 1% to Capital Factory and probably given up more than 1% to your investors. And the reason why is represented by those two charts, right? Global venture capital exceeds the DoD budget. It certainly exceeds by about 2x the DoD, procurement spending budget, of which only a fraction of that is R&D, right? But the more important one really is that slide there on the right, which is the amount of money that's being spent on those 14 critical and emerging technologies that are listed in the National Security Technology Strategy. Over a 3-year span, the investment into those technologies has more than doubled. And there's no reason why it's not going to continue to do so. There probably will be a little flattening as our economy slows down, but it's going to come back up. I mean, those technologies are critical to the success of our country, and all the money's being spent in the venture capital space. And the DoD, in around 2016, with the establishment of the Defense Innovation Unit, began to recognize that. Go to the next one. And so then you started seeing, beginning with Defense Innovation Unit, and then, kind of, I think we'll see the culmination of this across the services being what Naval X is about to do with their Nautilus program that they're about to stand up, is these innovation cells that are trying to find you. They're trying to find emerging technology, venture-backed companies, and to do that, they're coming to places like Capital Factory, because that's where the companies are, right? And those cells all have common objectives. They want to attract startups. They want to make their problems open and accessible and collaborative. Somebody in the Pentagon one day read the Lean Startup, and they're like, holy crap. Like, we're doing everything wrong. Let's start a bunch of cells with X in the name. And that's really not that far off from what happened. They want to make the proposals a lot simpler. Who's submitted? Has anybody here submitted a DIU proposal? An initial DIU? It's like 5-page white paper. You can literally do it on a lunch break. If you have some collateral that you use to market your technology, it's not that hard, right? Jorge talked earlier about speeding contracting, speeding payment, and adjusting contract terms so that they work better for venture-backed companies with short runways, right? That means being able to front-load most of the contract value into early milestones, and most importantly, very flexible and in times deliberately favorable intellectual property terms for you. And then, that whole iterative product design with customers. That 7th bullet, they all say that they're here to facilitate transition and commercialization. I think after the beer starts flowing, we'll talk about how bad they are at that so far. But we're working on it. Go to the next one. The most exciting thing for me about what we do is not how shitty the DoD is at transition at this point. It's the fact that we've only really been doing this for about 5 years. DIU was stood up in 2016. They really got rolling in 2017. In 2017, AFWorks was formed by, executive order, or not executive order, by a order of the Secretary of the Air Force. 2018 here in this building, they scoped out their first real big program, which was Pilot Training Next. It's now Pilot Training Transformation. I think it's probably one of the most successful programs that they've had and one of their first. But really, and then 2018 being a big year when a lot of it happened with Army Futures Command being activated right down the road, and then the following year, them standing up the Center for Defense Innovation here on the 8th floor. But we've only been doing this for 5 years, right? And really, we've only been doing it for about 3.5 to 4 years. So I think we've got a lot of reason to believe that we can actually get better at this over the next 4 and finish what I call the material innovation pipeline. So go to the next one. What we've learned over that time, there are 4 key concepts that I teach in a bunch of different things that I do and that I write about. The one that really should matter, or the 2 that really should matter to you, is that key concept number 1, 20,000 solution providers are better than 20. Those numbers are kind of notional for alliterative purposes, but the reality of it is there are about 10,000 Phase 1 SBIR proposals that are being submitted every year. And there are about 20 companies that are eating up about 50% of the DoD's R&D budget. One of them's right over there. Thank you, Raytheon. Can we have some of the rest of that money back, please? And then the other one, and I'm going to talk a little bit about this one, which is none of this should be about trying to turn technology startups into defense industry companies. And that's really traces back to some of the stuff that Paul said a minute ago. So next one, please. So what I have learned in working at the intersection of technology and innovation and defense acquisition over the last 5 years is really summed up on this chart, right? 8 steps that you will take to go from a company with little or no experience working with the Department of Defense to ideally having your solution deployed in a program of record as part of a system of record and actually creating mission impact for warfighters. That is the goal here, right? The goal is to take those 20,000 potential new entrants every year that are submitting Phase 1 SBIR proposals, and in some of them, there should at least be pathways by which those companies can get all the way into a program, fielded to the warfighter, and creating mission impact. Because creating mission impact, if we're not doing that, then we shouldn't be doing any of this, right? Because that's really what it's all for. Everyone in this room right now is participating in step 1. a funnel fill event, right? These types of events that happen through AFWorks AMAs, through Capital Factory, Defense Academy, through Defense Innovation Unit events, through all kinds of different events. Down in San Antonio, a really great one, the Alamo ACE, has been attracting a lot of interesting startups over the last couple of years as they've opened that up to a more innovative space. The purpose of the funnel fill event, or the funnel fill process, I should say, as it relates to the material innovation pipeline, is for y'all to learn what are the DoD's problems, very generally and broadly, but what are the DoD's problems? What are these programs, all these different organizations that have X's in the name, like what do they actually do? How do they contract? Am I even eligible to win an award? Like what are the rules? At one point, you had to be less than 50% venture capital owned. Now you don't. Next week, you probably will again. At some point, they'll figure it out. But for you to be able to qualify, am I eligible to do this? Do I want to do this? And then the most important part of the funnel fill process is for you to meet the Sherpa, for you to meet those handful of people that are going to help you understand what are the security requirements my company has to have in order to be able to complete a phase 1 contract and submit a phase 2 proposal. What if I do have 8% of my cap table occupied by a fund that has, say, some investment from a Hong Kong bank or something like that, which is something that I've seen happen plenty of times. You're gonna meet those people that are gonna help you solve those challenges. And then really the space where I work is in steps 2, 3, and 4, which is developing and validating your use case, understanding how what you do in the commercial space translates to a military user, a military context, a military problem, and then getting a lot more detail than that, which we'll talk about, helping you win that first big prototyping contract, that first $1 million to $3 million contract, which is roughly the range of these contracts between an AFWorks open topic phase 2, which is right now $1.25 million, to the average Defense Innovation Unit award, which is about $3 million. And then helping you build the prototype in the right way and understanding how to execute that delivery to the government so that you don't neglect your government customers, so that you deliver on what you promised, but also so that you don't neglect your investors. Because guess what? Your company's not going to scale on the backs of innovation awards from the DoD. I'll tell you why you should be going after them anyway, but you should be continuing to exercise and organize in your business, execute your business in a way that's going to make your investors happy, because your investors are the people that are going to help you grow your business and scale it. Next one, please. So key concept number 2. We should not be trying to turn technology startups into defense industry companies. So the chart that you're looking at there, everybody probably understands. You guys probably don't need the label there for serviceable addressable market and total addressable market, right? Y'all speak this language already. But this is the idea that you have a product roadmap and a go-to-market strategy that you have, more or less agreed with your investors. This is what we are going to do. This is what they invested in. This is our technology or capability. This is the problem we're trying to solve, the market opportunity, and this is how we're going to enter that market using your money. Please fund our Series A, right? And then after we do that, we're going to come back and ask you for a Series B round, right? And if we have been off, messing around with the Air Force and not actually capturing any of that initial market share in the commercial space that we promised you, you're going to say no, thank you. Go somewhere else and try to find your Series B, right? So you have to stay focused on that, right? And there is a risk zone. You're not going to be able to, in most cases, sell your commercial product directly to the DoD. Every product, just about every product or every application is going to require some kind of configuration. Whether it's the data sources that are feeding into it, whether it's the UI that's going to integrate with, whether it's getting it to the right security level, there's going to be a slightly different path. Your role in developing that product or in choosing that use case and that product that you're going to build for your DoD customer is you want to make that yellow box as small as possible. Why? Well, there's 2 reasons. One is because that's what's going to keep your company focused on your investors and your commercial market, your commercial go-to-market and product development roadmap. Does that make sense to anybody? Like, I don't want this to be a lecture. This should be pretty obvious, but I see this happening all the time with companies. They win that $1.5, $2 million award. it matches all the venture capital they've had. I mean, literally that represents 50% of all the money that the company has taken in to date, their biggest customer by far, and so they get consumed by it. That is not the winning strategy. What you want to do is you want to take that, you want to develop that DoD derivative use case so it's as closely aligned with your commercial product as possible so that you can keep your team focused on advancing that product and those features that are going to help you capture that commercial market that you promised your investors. The DoD has risk in that yellow box too, right? Because if Air Education Training Command is buying a product that's a significant departure from your commercial product, then they also have to buy the sustainment tail for it, right? The ideal scenario for the DoD is when you're pushing out upgrades to your commercial customers, the DoD is getting the exact same upgrades, right? And the further that green arrow departs from your commercial product roadmap, the more risk the DoD is going to have to take that your sustainment of that product is not going to match up. That's a very, very vague statement. It's obviously going to depend a lot, whether it's hardware or software or whatever. But generally speaking, that's how everybody's going to minimize risk in this process. So why should you, or how should, I mentioned before that, trying to grow revenue in your business on the back of DoD contracts is not a great strategy to anchor your company to. You should be focused on your commercial market. So why are you even going after DoD money in the first place? Well, if you follow this basic idea, you can actually leverage DoD money in 3 ways. One is if your DoD product is very, very, very similar to your commercial product, then you're actually using DoD money to advance your commercial product roadmap. Features, R&D, model building, whatever it is, you should be able to leverage DoD funding to actually advance your the things that you would have done with private venture capital. And you really, truly are offsetting dilutive capital with non-dilutive capital. The second thing is you're going to get a really cool validation stamp from a customer that everybody recognizes and respects, so that when you go raise that Series B round and you're like, we built a prototype for the Air Force using this exact same core technology, and it met all of their security requirements, and it solved the customer's problem. That's a pretty good story. It's a pretty good logo to have on your next raise deck. And then the third reason is maybe you're going to open up a new market and a really, really big new customer. The number of technologies that are transitioning from these innovation programs into programs is very, very small. I expect it to get bigger. But if you don't try, if you don't develop, improve, and validate that capability in your technology for that DoD customer, you're never going to open up that new market. There's a whole other conversation that we can have about what's the best way and the right way to do that. But at the end of the day, that is a third reason. It's just should not, in my opinion, be the primary reason. Next slide, please. So developing a good, detailed use case, right? This is what we do in step 2 and 3 on the material innovation pipeline that I showed you a few slides ago. It's a lot more than just articulating a problem, right? You need to understand the operational environment where that product is going to live. And that means, what problem does it solve? So you have to go out and talk to customers. You heard the guy from Ops Lab, I forget what his name was, talking about all the customer discovery interviews they did to find out what was really the pain that customer was feeling so that they could build a product that was going to address their pain. But it's not just about that. It's understanding what system it's going to have to live on or integrate with, right? If it's a hardware product, it's going to have to be fueled by something. It's going to have to connect to something. It's going to have to be fielded somehow. If it's a software solution, it's going to have to live inside of an information network. It's going to have to connect to the user through a user interface. Those are, and guess what? The government, for the most part, is not using like standard commercial microservices architecture so that your commercial product is going to plug in through an API. You're going to have to build those front-end and back-end integrations custom for that customer in most cases. Understanding exactly what the data sources are whenever you develop your use case is going to tell you whether or not it has any hope of transitioning. And I'll just give you an example. Like predictive maintenance is a great example. The Air Force has a huge problem maintaining availability of aircraft, C-17s, F-16s, these legacy aircraft programs. And there are commercial predictive maintenance tools out there on the market that are very, very good at modeling and predicting failures in closed systems. So like Landing gear failures is a great example. Landing gear failures are a huge driver of non-availability in aircraft. I can build models all day long on a closed system and can predict with some certainty when a landing gear is going to fail on an F-16. The problem is you can't operationalize that technology unless your name is Lockheed Martin, because they have all the data and it's proprietary. And if you don't understand that when you're going through your customer discovery, you're going to build a problem or a product that's going to look really, really good at your product demo at the end of your prototyping phase, and then it's going to go nowhere. So you want to try to develop that use case with as much detail as you can so that you actually know whether or not that product will be able to integrate and will be able to scale such that it's going to be able to get to the customers and create mission impact. A great place to start is the focus areas on the AFWERX website. This is actually something that they have recently added. And I mention AFWERX because if you guys are trying to find a military user or a military customer for your commercial product or your commercial technology, in my opinion, the best place to start is the AFWERX, or now Space Force, Open Topic SBIR. Because strictly for the reason that you can tell them what you're going to do. Instead of waiting for them to publish something and then going and doing that, you can say, hey, I have this really cool technology. It'll solve this problem for you in this context. This is who I think the user is. This is who I think the buyer is. Let's get off to the races. And they will say yes, right? If it fits their technology focus areas, which are listed on this website. So this is a very, very good place to start. And there's a lot of detail about the types of problems that they're interested in having solved. You can still propose whatever you want, but if you're looking here and you find something that fits, you're going to have a pretty good chance. Next slide. So the keys to winning in these programs. So I mentioned before kind of the pathway of the defense innovation ecosystem and why they're looking for venture-backed startups, right? Because they want to leverage not only all that commercial capital that's being deployed, but all of the innovative speed and those kinds of things. So those types of things end up getting a little bit pulled into their evaluation criteria. So if you want to win a contract, it helps to highlight those things that have caused the DoD to come to Capital Factory in the first place. So having some commercial traction, Paul said earlier, starting with a commercial product, I think, is absolutely the pathway to success. An existing commercially proven technology or approach or capability that customers have paid for is a great place to start. Having venture capital, having at least $5 million in investment is also a really, really strong signal. I'm not saying you have to have $5 million to invest. What I typically will tell a company when we're going to start working with them, if they have less than $1 million in VC, their odds are going to go down a lot on whether or not they're going to be able to win an SBIR. And this is not the official position of any of these organizations, right? It's not officially on the evaluation criteria, but the reality of it is if you look at the metrics that are published in the DIU annual reports, if you look at what folks are, are talking about in terms of statistics related to the AFWERX Open Topic and those things, the fact is they're talking about the amount of venture capital raised by the companies that are coming in. They're talking about the number of new entrants coming in and the commercial products that those companies have. Those things are important to them. And then that strong customer demand, right? You want to show them that you've already engaged with your potential users and customers and that they understand the approach that you're suggesting and that they, at the very least in the conceptual level, have bought into it. And a great way to do that is to provide letters of support and those kinds of things. And then the final thing is understanding the parameters of the program that you are proposing to. Chase talked about that a little while ago. You have to read the proposal, or you have to read the solicitation, and you have to follow the templates in many cases. Write down the information that they're asking you for. This is another thing I see folks all the time. The way the proposals and the templates are structured is it looks in many cases redundant, and it looks in many cases, it's not a narrative, right? You want to tell a narrative about your technology. When you meet with a potential customer or a potential investor for the first time, you have a speech, you have a story that you want to be able to tell about your technology, about how it originated, about your team. All of that information is going to be in that deck, but it's not going to be in the order that you're used to telling it in. And my caution to you is give it in the order that they're asking it for and keep it confined to the template and the format that they have given you. The reason why is in most cases, they're going to hack that proposal up and they're going to hand out bits and pieces of it to different folks and they're going to look at different things, right? And you may have to put on there some blurb about your technology approach or commercialization strategy or something like that, 6 different places in that template. Put it in all 6 places because there may be 5 or 6 or 7 different people that are actually going to look at that proposal when it gets cut up. And you want to make sure that everybody's checklist is being satisfied when they look at the pages from your company that they have been assigned to evaluate. Next slide. Yeah, so just a little bit about us. So again, we represent a big portfolio of companies. We've submitted many SBIR proposals for our companies. We have 30 contracting officers, former contracting officers that work with us. And so we have a ton of experience in that space. If you want to talk more about the types of services that we provide, I'm happy to do that for you. And I think that's the last one. So any questions? Bam, it's beer time. Yes, sir.
You guys have, for us new people, comprehensive, like all the things, every vision that went to X and understand, guide us where to go.
Yeah, I mean, yeah, it's not honestly that hard to figure out. I mean, but yeah, Naval X. So I guess short answer to your question is yes, we do. But you can get all that information. If you want to know like what AFWERX's mission is and how they contract and all that stuff, Capital Factory can give you all that information as well. Is that it? All right.
Thank you, Kevin. Thank you so much. So that round